Liz Davidson, welcome to So Money.
Thank you for having me. I'm excited.
I'm excited. I'm so thrilled to be with the founder of financial wellness as we know it. We throw around this term constantly in personal finance, and you had the vision decades ago to build really like a mission around this, targeting employers, which I think is so brilliant to bring this literacy to their employees. I want to learn all about that. But first, take us back to, I guess now, 20 years ago, before financial wellness and workplace financial wellness was an expression we use or a whole category. What did you see in the marketplace that made you certain that companies needed this and that their employees needed this? And was it hard convincing folks back then to implement this?
Yeah, so two things. I'm really dating myself here. It's 27 years now. So it's crazy.
Closer to 30, I guess. Yeah.
Yeah, it's insane. 1999. And you said something interesting, what made me certain. And I think when you start a business, there really is no certainty, right? So I had previously started a hedge fund, a very boring hedge fund. It was value-based, buy and hold, but a hedge fund in that it was available only to accredited investors, high net worth people. And in that process, I had a gentleman that was our portfolio manager, and I was getting investment capital into the fund, talking to these investors. This was the dot-com era, and I was watching them because I would broaden the conversation beyond our fund, and I was discovering they were taking all sorts of risks on individual stocks, that could go to zero. And I'm thinking, you work so hard to build this wealth. These were entrepreneurs mostly, but also, just people that, high-powered attorneys and people that had really amassed a lot of money, but didn't come from money. So this was like a lot of blood, sweat, tears. And they were putting themselves at risk. But then I thought about it and I was like, well, they have multiple homes, like they could sell, they could downsize and be okay if and when the crash happens. What about everyone else? What about the people, we were in San Francisco at the time. What about the administrative assistant that has equity on paper and is spending as if this is worth $2 million? And that was going on. And it's like, who is there for these people?
Nobody.
That isn't trying to sell them. And at that point, it was nobody. And then the financial media at that point was heavily on the market, right? It wasn't as much on personal finance.
Correct.
It was much more money's top 5 mutual funds based on like last year's return. I mean, it was just all very hyped. And I'm going, there is no one out there that has people's back, that is really looking at their situation from a completely unbiased perspective. And I feel this is so important. We started out doing workshops for women, which was actually a very unsuccessful business from a customer acquisition cost perspective. There was absolutely a need, as you well know, but there was not a demand for it. But in that process, because it was successful in 2 cities where I had connections, San Francisco and LA, in that process, I had a lot of women that were in HR and benefits that would come to the workshops and would say, well, can you come to our company? And that's when it hit me.
B2B.
Wow, B2B. And they were like, what's your daily rate? I remember the first time it happened, I just was like $500 because I was charging $49.
Add a couple zeros. Yeah.
And I thought if I 10 people, it was hard to get people
to
pay for this. I was like, wow, this is so great, right? And then from there, as I dug in, it became so obvious that these companies are spending so much money on benefits, but they're not really educating the employees on benefits. And you got to bring together maximizing your comp and maximizing your benefits. And that this really could be a foundational benefit for companies. It took years for them to get there. We were doing stock option workshops because investment banks would call us and say, this company, is looking to potentially go public, but their employees need to know more about their options. So we were just kind of figuring out where we could stay alive and make payroll per se. And then over time, Enron happened. And over time, I think the value of independence went up. The understanding of this as a true benefit, the understanding of financial wellness, similar to mental health and physical health. You got to invest in financial health. Wellness programs started really emerging in full force. And it kind of just, they say the rest is history type thing. Yeah.
And I've seen these studies where the adoption rate to things that are new, whether it's a 401k or, that employers, the relationship between employers and employees is unique. I don't want to say it's great, but it's unique. There's an advantage there. When you're at work 10 hours a day, right? And your workplace says, hey, we found this great benefit that we want to give you. You're going to look at it at the minimum. You're going to consider it. It's kind of like a captive audience. And so there is so much opportunity, if you take good advantage of that, to really help your employees advance and retain them. Really, this is a retainment tool for so many companies. But going back to what you said, and I got kind of stuck on it, you were like, I had these wealthy clients at the hedge fund, and it was the dot-com sort of cycle, and they could lose this money over here, risks, et cetera. I think that there is, and I want to hear your take on this, but my sense is that as a culture, we assume that if you are quote unquote rich, that you've figured out everything there is to figure out about money. And that if something does happen, you'll just figure it out because you can sell that house over there, you can move money. But the underpinning, the underlying conditions are not good. You're still somebody who might be, too risk tolerant. You're still somebody who might have scarcity issues. You're still somebody who could, money trauma does not erase itself just because you have money in the bank. And I remember I was invited to be a candidate to potentially speak at an event. Okay. And the board was vetting me. And this event was primarily wealthy entrepreneurs, many of them who had gotten really lucky with IPOs and overnight rich. And I was brought in as a potential speaker to talk about financial wellness. And the board, I kid you not, was like, well, there's this one gentleman who was very anti. He was like, I don't understand what you could possibly teach our audience. These are wealthy people. What is there to learn about money? Like, they have the money stuff figured out. And I was like, I don't, you know what? Let's go our separate ways because I don't want to fight. This is not a battle I'm going to fight with you, like I can't change your mind. So let's just call this a day. But it just reminded me of this like pervasive cultural assumption that is once I make more money, everything will figure itself out. It doesn't. And I thought, well, it was so interesting. You have this study. So going back to your work, there was a 2026 financial wellness report. I believe your firm did it in America. Workers 30 to 44 earning 60 to 100,000. They saw, that's like the stable middle. They saw stress rise. But what did you see about people who were even making more?
Yeah, I think you're making a really, really good point here. We do think that we conflate income with financial health, and it's a math equation. If you are outspending your income, and the correlation is less tight than you would think. There is a correlation that when you're making, low income, you are more likely to be financially stressed, but it is not a linear correlation by any means. There's still a very large number of people making over $500,000. I believe the latest stat is about 40% living paycheck to paycheck. So think about that, because what happens is we just increase our lifestyle and we are not wired to save, right? Most of us. You mentioned mindsets of scarcity, and I think there's really a financial almost anorexia that is a thing for some people.
Oh, wow.
Which is interesting. But in general, yeah, financial trauma and financial wellness, just because you are doing well in terms of your income or even your assets. Obviously, assets are more important in the picture, but a lottery winner, right, or professional athlete, we do a lot of work with the, different professional sports organizations, can have sudden wealth, or someone that's a CEO and they IPO and, they suddenly become wealthy, but not have the knowledge, habits, and behaviors to sustain that wealth, right?
Yeah.
And that is absolutely critical. So we say financial wellness is the way to obtain a sustainable financial security.
Hmm.
It's the only way to get and sustain financial security. You can be financially secure in a moment of time,
Right.
but that doesn't mean it's going to last if you don't have financial wellness.
So tell us what you have learned to be the pillars of financial wellness. And I'm sure in the beginning it looked like one thing, but now 27 years later, there have been some tweaks to it, given like all that we've gone through.
Yeah, so we have defined it, and we've defined it officially and published our definition. And since then, a lot of other industry organizations have kind of coalesced around similar definitions. So I kind of combining ours with what thought leaders in the space would say. I think where it's coalesced is having a low or at least manageable level of financial stress. So you can do all things right, but if you are suffering from financial stress that's high or overwhelming, you're not financially well, even if all your behaviors in your financial situation are on point. The second is having your financial resilience layer built. So you have no high interest rate debt, you have an emergency savings account that is fully funded, you are properly insured. You're going to be okay if something happens to you.
Uh,
Then it's having a plan for your goals. So you've established your financial goals, you've established a regular savings pattern, ideally automated. And you are on track to meet those goals on the time frame that you've established. And that's, as you know, an iterative process. Sometimes we say we want it in a year, and then we look at what that takes and we go, okay, we can have it in 3 years because we don't want to sacrifice too much today. Like, it's a balance, right? But you figured out that balance and you have these goals accounted for, and you're saving and investing appropriately and ideally in an automated fashion.
mhm.
And then the final is really that preservation of wealth for those who have accumulated assets. You want to make sure you have the estate planning in place, which is really, estate planning is important for everyone. But once you get to, really having to worry about estate taxes and trusts and umbrella liability insurance, if you are in that situation, you have that in place so that you're not, one of those horror stories, right, that is a victim of not thinking about those things before, the inevitable
The
happens.
inevitable happens. It's like
Yeah.
so common. I think we have a fear of, our our aging selves and facing, hard things. It's
Yeah.
a very
Not
emotional.
pleasant.
It's so I mean, it's emotional, Liz. I mean, I think that's what financial wellness, it gets to the heart of it. You obviously have to have these like plans and these systems and automation so that you can almost like get ahead of your own feelings and emotions about managing your money. You
Yep.
automate so that you don't have to think about and do the thing, which can be painful, to transfer money every month to your 401k. A lot of this work, I feel like, can be facilitated working with a financial advisor. But you wrote a book. It was not your most recent, but one of your first books is called What Your Financial Advisor Isn't Telling You. Now, this book came out a while ago, but I have a feeling that there might still be things that your financial advisor falls short at supporting you with and isn't telling you. And maybe they're not trying to be malicious about it, but it's just that, it's not an all-encompassing relationship sometimes. And we've done a lot recently on sort of finding a good financial advisor. So what's your recommendation for finding a good planner advisor to help you with some of this financial wellness stuff? And obviously they do more than that. They could help you actually manage your money too.
Yeah. So I want to clarify, this isn't malicious at all.
No.
What your financial advisor isn't telling you. It's because there are areas of the impact your finances that they shouldn't be experts in by nature of what the profession is designed to do. For example, managing money with your spouse. Who you marry is one of the best predictors of financial success. And I'm not talking from a, gold digger
Pedigree.
perspective on either side of the
Right.
equation. I'm talking from finding someone whose values align with yours, who is going to be a good complement to you in building wealth together and it will be open about money and shared goals and will enhance your future financial security. You're better together versus, we know that finances are a major cause of divorce. So
Right.
that alone, there's a whole chapter in that book about the importance of that alignment and having regular money meetings. Like no financial advisor or none that I know are going to get into
It's
kind
true.
of the
Relationship advice. Right.
exactly. There's a line there. Even us as financial coaches, we probably go a little further because, we're really equipped to deal with the emotional aspects of money just, through the training that, our coaches have. However, there's still a line we can't cross because we're not therapists. So the book is really pointing out that a lot of people will delegate to a financial advisor. They'll kind of say, okay, here's my money. What should I do with it? And they're not informing themselves. They're not thinking about things financial advisors may not factor into the equation, like real estate, et cetera. So that really was the thesis. Now, since 2016, there has been a expansion of fee only financial advisors and I think a much tighter adherence to fiduciary standards. And so we now have financial advisors that are much more holistic as opposed to siloed and, I'm just going to kind of manage the assets you give me. They will look much more at your full picture. All that said, most of them are still focusing on those that have assets. So
Yeah.
there's that whole, what do you do to get to a place where you're lucky enough to have a need for a financial advisor. And that's where financial coaching comes
Hmm.
into play and where workplace financial coaching can fill a gap because it's paid for by the employer.
Exactly.
So it's hard to say pay for this when you're financially struggling, right? Like that,
Exactly.
you
It's
know,
kind of the catch when you're even like someone like me, most, if not almost all my stuff's free, except for my books. And I have so many members program, which is like a monthly fee. It's not expensive, relative to these thousands and thousands of dollars course. I just feel like you're right. It's weird to be like, buy my course. It's $3,000 so that you can help yourself get out of debt.
right.
Save the $3,000, learn how to get out of debt for free online, which brings me to AI and the relationship with financial learning and AI. So
Mhm.
ChatGPT has partnered with, I believe it's Intuit, to sort of work with them to fine tune a lot of the financial outputs that the LLMs are providing. They've realized so many people are going to these large language models to learn about, how to get out of debt and invest and all the things. But there are limits to what AI can help you with. So tell us, where can it begin for us and where does it end when it comes to financial wellness?
This is a very interesting question. And obviously the models are continuing to evolve, but we all know it's also how you prompt it, right? And so there's what you get can be so varied depending on how you ask. And, I think we've all experienced that. Like I've learned to set confidence levels on information and learn to make an argument against this. So
Yeah.
you can see both sides. So there's a lot of inaccuracy out there. I have tested AI on topics, even non-financial, that I know a whole lot about. And it's a combination of sometimes blatant inaccuracy, sometimes just missing context. It's essentially scrubbing the internet and trying to weight good sources over bad. And I think the models have done better at that. But, we used to joke, right, that I learned it on the internet. It must be true, right?
Right.
But somehow, if AI is telling us, we're like, well, Claude said this.
Right.
Okay. So it's less accurate than I think most people think, and it can be very biased based on kind of how they're prompting. It tends to try to give us the answer we want to hear. However, I think it's a very good thing for research. We have our own AI embedded within our system, but the difference is it is going off all vetted content that our CFPs have created and continue to maintain and are in line with what we know not only is factual but is like relevant to people and will guide them. And it's really a coaching AI that's designed to not just go further. If you ask about taxes, for example, it'll go further and further and further and more detailed. We're trying to broaden the lens. You ask about taxes, well, why?
Yeah.
Maybe you're getting a divorce. Okay. Well, maybe that's more important to talk about. Do you know what I mean?
Right.
So I think, I would look for AIs that are vetted in terms of closed in content that you can really, really trust. I also think great for some preliminary research, but what a professional can do, whether it's a financial coach or advisor, is manage your assets. And at some point, AI probably will be able to do that. But right now, manage your assets and hold you accountable and, be your partner
Thought
and
partner.
really
Right.
have that. We undervalue empathy. It's interesting with AI when, we talk about singularity and it becoming smarter than humans. And I'm thinking, is this so interesting? Because when we look for like candidates for a job, EQ is huge.
Huge.
So it's this whole idea it's going to replace people. Empathy and our humanity and our ability to motivate and lead and connect and the hormones that are released when you look in someone's eyes that is a real human, like, the connection, right? Like that can't be replicated. And we've all had interviews probably in our lives with really high IQ people that are a lot smarter than us that we're not going to hire because they don't work well with the team or they lack, the leadership skills or, that's,
Yep.
but yet we're looking at this really intelligent tool as if, it's a substitute
It's
for
the
humans,
know all.
a
Right.
complement for humans. It is something that's convenient, accessible, relevant when the data that goes into it is relevant, but it's not a substitute. And I don't think it ever will be.
Well said. I hope you're right. I really do. I think what you're this also it reminds me why your work is so important. The accessibility of what you do is so needed because in the absence of it, people will just go to the AIs and get wrong information as
Yeah.
opposed to, finding a resource that's actually vetted, whether that's a planner or going through one of your programs through their employer. So back to your wellness report, I wanted to bring this up because I thought it was interesting. The wellness report in 2026, financial wellness, found across America that younger workers under 30 making under 60,000 actually saw stress improve, not a group that you would expect to be gaining ground on that front. So what's working for them? We just did a whole sort of segment on money maxing. This is like there's a lot of
Like Max.
enthusiasm. Yeah, there's some enthusiasm which I think is great with young people around saving and investing. My son is 12 and we did this thing where we went around the table. We were like, if you suddenly got like $500,000, what would you do with it? He goes, well, I would invest half of it. And then
Good
the
for
other
him.
half, I would do X, Y, and Z. And I was so proud. And it doesn't take a lot. We've talked about investing a handful of times. We've just made it something that's worth being curious about. And we show them and like, we're not investing their money. Well, actually we are. We've opened up Trump accounts, but like it's in his brain. And I think, he gets it. He's 12. He gets compound interest like that. It's not a hard thing to figure out. So I'm hoping that will endure and that will be his generation. But what are you seeing? Is it like what I just explained, kind of more enthusiasm for some reason around like making the most of their money somehow?
I think it is. I
Or they're just
always
living home with their parents and everything's
when
paid
I
for?
was a Gen Z, our generation, I'm Gen X, so our generation was not at all focused on this at all. I mean, that's obviously a generalization, but it is fascinating. So you look at the lowered stress and then you look, I don't know if you saw the coaching usage. The biggest group of coaching users historically has always been pre-retirees until this report. It's flipped.
Wow.
It's actually Gen Z.
Wow.
And now let me caveat that with one point. When you look at coaching being talking to a human or chatting with a human, not an AI, but there's a human on the other end of the chat, they are number one. They are number two in terms of talking to a human. That is where pre-retirees are higher. But even their desire, which
Yep.
we say, they don't want to talk to a person. Well, they actually want mentors, right? This is a generation that I think is very comfortable with therapy, life coaching.
Right.
Those professions have gone up almost like when you look at social media and AI usage and you look at therapy and life coaching, the slopes are very similar. And
Interesting.
I think that is where the desire to work with a human is actually higher because on some level the technology is kind of driving us crazy. You know what I mean? So
Yeah.
there's that. If they are talking to someone they respect and they connect with, and it's really kind of a mentor coaching, I'm investing in you, they're very happy to do that.
Mm-hmm.
Whereas in between, the millennials and my generation, Gen X, are actually the ones that are the least likely. So it's
Mm-hmm.
interesting. It's not what you would expect. We draw a lot of generalizations about technology that don't completely track when you do the research.
Your company, Financial Finesse, has evolved. I'm sure so has its concentration on topics, right? So when you look at the next 5 years with everything that's changing in the workplace and the family dynamics are changing, people getting, married later in life, people living longer, the sandwich generation, the rise of healthcare costs, what do you see as on the frontier of financial wellness, areas of concentration outside of the norm, the things we should always be doing, right? Should always be, saving for a rainy day, paying off high interest debt, automating your finances, investing in your 401k at work if it's accessible and there's a match. Yes, yes, yes. But like really recognizing how the world is changing and where the conversations need to shift and the priorities with your money might want to shift. What are you seeing? What are you predicting?
I think the number one area that is the biggest frontier and the most untapped, but right at that tipping point is optimizing your benefits. So most of the employers we work with,
Maxing. It's called
benefits
maxing,
maxing.
Liz.
I know.
Benefits maxing.
Benefits maxing. I'm stealing that. Benefits maxing. Benefits optimization doesn't sound quite as cool. Benefits maxing. So your employer, I mean, we work with mostly large ones, but offers at least dozens. Large ones offer hundreds of benefits between everything from the traditional 401k, the cornerstone 401k, healthcare, insurance of all types, to EAPs that provide legal assistance, maybe credit counseling, to financial coaching, to commuter benefits, fertility benefits, all sorts of physical wellness benefits. There's tuition reimbursement. I could go on and on
Wow.
and on. Legal benefit. So many things that they either subsidize completely or give you a really good discount on. And it, like you said, these are vetted. So you have a degree of safety versus the retail market. You might run into some bad actors
Yeah.
in some of these areas. And the usage and awareness is so low. So what we're doing more and more, especially when people are struggling with their budget, is where are you spending on, maybe daycare? You have subsidies that you're not aware of that
Right.
could come, that is meaningful money back in your pocket. It really has not been done. Typically, the companies have done a very good job organizing their benefits sites, working, with large consulting firms. So it's nice sites that are easy to navigate. But when you're navigating through 100 things to try to figure out what's relevant to you, and then how do I make a decision? Healthcare is a big piece of this.
Yes.
Healthcare is huge. The average person loses $2,400 by not making the right healthcare
Wow.
choices. So that area in particular, and getting people the combination of technology and coaching to really select the best plan. Obviously, we don't know our future, but there's a lot you can do from your past medical claims, your situation, to be able to identify with what your employer provides or your spouse's employer, right?
Mhm.
If you can be covered by them, like what is the best route? And it can make a huge difference. Open enrollment, people go through it like it is
Oh
just
my
this
gosh, the
enormous pain.
worst.
It should be Christmas. Like we're getting healthcare. And I know it's more
Yeah,
expensive now, both for the employer and employee, but it's at least subsidized, right?
exact.
And,
Yes. It's
so
the reason people don't leave their employers.
yeah,
It's the reason people
exactly.
don't start their own businesses, sadly. It's because,
Yeah.
and that's another conversation. Should your health benefits be so inextricably tied to your employer status? I think, and if we're going to do that, then every employer needs to provide it. But sadly, they don't, but yeah, while you have it, take advantage of it.
Yep.
As we wrap here, I'm wondering if there's a piece of advice that's kind of hanging out in the ether, financial advice that you run up against a lot that you want to just like destroy because you see it being not helpful. Maybe the intention is not to derail you, but it's sort of whether it's a myth or a misnomer or just, I mean, I have a long list. I have things like, just today I was recording something about like stay at home boyfriends and girlfriends.
I think similar to what you're saying, but maybe a little broader, is no one cares more about your money than you do.
Mhm.
Not your financial advisor, not your financial coach, not, your boyfriend, girlfriend that may be helping you out financially. This is like your health. I think have learned we have to proactively take care of our health. We have to physical health. We have to proactively take care of our mental health. We have to proactively own our financial health. I think with trends towards automation, there's a lot of thinking that I was auto enrolled into my retirement plan. It's taken care of, but do you know what you're invested in? Is this enough to say? I mean, no, lean in and make it part of your holistic investment in yourself. And I know that's hard today, right? We tend to take care of others and we're spread so thin and we're jumping from one task to another, but make it an intentional thing to spend time understanding your financial situation, taking agency for it, seeking out a coach or advisor and a good one, learning enough about it so you are in the driver's seat, because you do not want to be discovering after death, divorce, a breakup, that what you thought your financial situation was
Far
is
from it.
totally different, or investing in something you thought was safe but wasn't, right? The only other last thing I'll say is this trend towards investing that young people are doing is very positive, with one caveat. There is a trend towards trading and
Yes.
Robinhood and,
Which is very different.
almost a day trading mentality. That is gambling. That is not something that is sustainable. Odds are against you. You're betting against the house.
Exactly.
3% difference between people that are engaging in that activity due to taxes, commissions, and just emotional investing versus those that are investing for the long term and or working with a professional. And that adds up over
Thank you
time.
for that reminder. Yeah. Investing is investing, trading is trading. And yeah, trading is kind of gambling. And if that's your speed, I mean, Godspeed. I would say just know what you're in for. You're not on a path to building wealth. It's very, very dangerous. Thanks for pointing that out. Liz Davidson, thank you so much. I feel like 27 years in, but you're just getting started.
I agree. And
Thank you.
Can't wait for the next 27.
We'll have to have you back as you learn more and you can teach us. Thank you so much.
Thank you very much. This was great.